And it's also slated to be a big year for Chinese companies listing in the US. Online retailer Alibaba has created a lot of excitement with its upcoming IPO. And this week's China's largest private preventative healthcare provider made its debut on the Nasdaq. And we've got our very own Liling here in the studio to give us the details on the IPO for iKang Healthcare Group. Now, Liling, we saw a very warm investor reception to this IPO. What's the story behind the stock?
Well, Michelle, the story is the company's growth potential. Now, iKang price is offering at the high end of its target range, $14. It opened on Wednesday at $16.50, closed day one of trading just above $15. Not very exciting when you think about the math, but it's still a solid performance. This is a leading company in China's preventive healthcare sector. It has 12% of the market. It has 42 self-owned clinics, works in 300 other facilities through third-party contracts. And in 2012, it had 1.7 customers through a network that includes many of China's largest companies. And I spoke to the CEO, Liling earlier this week about the company's growth. Let's have a listen.
We're in the right space. Also, this market is growing tremendous because the penetration rate in China is still very low. It's about 19% people in China to go to annual medical examinations. So I think the market is going to just grow tremendously for the next few years.
And iKang's early entry into this market has its advantages. I mean, we're talking about a rapidly evolving sector and one where we expect healthcare spending to triple through 2020. And also, this is a market where we're hearing about Chinese patients being unhappy about rising medical costs and about the quality of care. So iKang definitely can leverage from its early entry position in this market. In terms of its expansion plans, it hopes to put the bulk of the $150 million it raised in the IPO into growing its main business, but it also wants to spend some part of that in an expansion into the dental services care market.
So a successful IPO, and it's the second one in the US by a Chinese company this year, but a lot more ahead. There's all this excitement and talk about Alibaba, but between Alibaba and this one, plenty others in the pipeline.
That's right. There are 8 IPOs, 2 of which have listed and 6 have filed to list. And then Bloomberg also estimated about 30 IPOs from Chinese companies are expected this year. Now, in terms of what's in the near future, we really just want to talk about 3 key companies that will be listing here: Alibaba, JD.com, and Weibo. Now, Alibaba, of course, as you said, is the big one everybody's talking about. Analysts expect it could reach or raise as much or even more than what Facebook raised, $16 billion. Its worth is at $130 to $150 billion, maybe even more. And it's also aggressively acquiring companies. We heard about that today.
A lot of purchasing, yeah.
Exactly, and that diversification is basically a huge plus in terms of positive investors' sentiment. Let's talk about JD.com. JD.com is, like Alibaba, an e-commerce site, but that's where the similarities end. JD.com is in its growth phase, so it needs the IPO to raise funds for investing in its company. And it's also, I mean, in terms of a bet, it's nowhere close in terms of a safe bet as compared with Alibaba, which can generates $4 billion a year, can ride out market volatility. The interesting thing is Weibo, the microblogging site. Now, that's the iffiest stock here. Weibo is owned by China's Sinocorp, and it accounts for the bulk of Sinocorp's market cap. Sinocorp is already listed, which begs the question of why is Weibo listing? Nobody really knows that, and Weibo is also losing customers to its competitor Tencent's mobile messaging service, WeChat. So lots of questions, answers we may get over the next few weeks when they list.
Lots of questions, lots of excitement in the IPO sector from the Chinese companies. So far, though, we've had iKang and Tarina. And we'll see what's going to happen because the momentum stocks in the tech sector have had a very rough time lately, so that may affect the Chinese IPO market. Liling, thank you so much.